But now let's bring in our next guest. That's going to be Jenny Horne, markets correspondent here on the network. Got a couple of stock stories to talk about, Jenny. And they're not good ones because they're both of these stocks are down. Let's kick it off with Tesla downgrade. Second day in a row, I think we've seen a downgrade in Tesla.
Yeah, and yesterday when the overall market pulled back, I feel like what was most notable was like the consistent weakness we saw throughout the day in Tesla. And I know this name was our one to watch to close out 2024, but it's a new year now. And as we know, Tesla historically does not necessarily always kick off these years super strong, at least based on what we saw some of as far as price activity last January. But the street today, fairly more negative on Tesla, just to characterize from this BofA note here, which they did downgrade shares due to high valuation as well as risks, they said, to their overall strategy. So they said execution risk remains high. Tesla's trading at a level that captures much of their base case long-term potential from these core autos, robotaxi, Optimus, and energy generation and storage. That they also said there are catalysts ahead, which of course could still help support the stock. However, right now their major risks do include the introduction, these catalysts do include the introduction of a low-cost model, of course, in the first half of this year, as well as the launch of the robotaxi expected to come sometime in mid-2025 and Megapack production ramp at Shanghai, which starts in the first quarter of 2025. All that being said, Tesla is trading at around 123 times its forward earnings, of course, well above pretty much any multiple we talk about. But Tesla, I will say, to make the argument, they always have a lofty valuation. I mean, it hasn't necessarily changed necessarily the fact that shares were, really, really strong to close out the last year.
Yeah, and, they raised the price target to 490 from 400. So It's almost like a downgrade, but maybe it's more of a neutral type of strategy. And to your point, Jenny, this thing is, valued on, the humanoid robots, Cybercab, Starlink, some other stuff that they've got going on. And it's definitely not the EVs because they missed deliveries for the fourth quarter. That they had anticipated, still under 500,000 vehicles delivered there. But on the flip side, we got Apple. When we've been talking about high valuations in Apple, the historic PE on Apple is about 22, 23. This is about near the 40 level, but MoffettNathanson coming out and putting the hammer down on this one?
Yeah, this is, I think, a bit more concise in the bearish shake from the sell side here, as MoffettNathanson did say Apple is due for a big pullback. So they did downgrade shares to sell from neutral, which just feels very rare, frankly, really throughout the analyst coverage. They did also reduce their price target to 188 from 202, which does imply downside roughly of 23% from where we closed yesterday. Now, shares of Apple, of course, did rise 30% last year, but they do believe this rally has been largely unjustified. They said much of this has been made of the fact that Apple shares have moved steadily higher over the past few months in the absence of any real news. But that's not actually correct, they said. In fact, there's been a great deal of Apple relevant news. It's just that it's all been bad. They also went on to say that they pointed to really the lukewarm reception of so far their iPhone 16 as well as Apple Intelligence. They did also note that iPhone 16 sales have waned relative to the 15, despite Apple pushing Apple, of course, Intelligence as a reason for, huge investment, as well as they've just advertised that, frankly, very well. They did also point to some intensifying regulatory pressure as another major headwind, while China does continue to really present a growing challenge for Apple moving forward. I have to say, rarely do I agree with some of these notes that are so negative, especially on a name that, if you were obviously taking on a bearish stance on Apple for the last several years, you would have been incorrect. But I do kind of agree with the lukewarm reception so far of at least Apple Intelligence. Gosh, I've had it on my phone, and I know we're still in the beta phase, but it's not a lot to be excited about. And frankly, I've been comparing notes with Oliver Rennick, who does not have an iPhone. And I do think it's amazing how some of these tools that we're getting on our phones now are like they're acting as if they're revered, but then other models of various phones already had them. So that's where I say I'm a bit of a skeptic, because it hasn't necessarily changed my life. Would I have gone out and bought a new iPhone for Apple Intelligence? Absolutely not.
Yeah, that's been their mantra, though, Jenny, is Apple doesn't innovate. They're always second or third
steal.
behind Samsung with the innovations. They just maybe do it better, get you into that ecosystem. That's what I was going to ask you, because I've got the iPhone 15 Max, whatever, so I have Apple Intelligence. I just haven't used it yet. Is that maybe part of the problem, where the expectations are that people are going to start using it, but I haven't yet?
To me, it's basically an upgrade of Siri. I mean, to me, I never used Siri, frankly, and I never found a need for it. So they've refined Siri, but if you're not a person that likes to have everything connected and have basically your phone do things for you, like it will learn your messaging and then send messages in your tone. I mean, I don't care for any of that, so I don't see that necessarily driving a super cycle. That is why we've seen valuations rise in this name. So I agree with the point of a concern of we're trading on the expectation, not necessarily the actual iPhone 16 sales or the even Apple Intelligence reception from the public, which frankly, from a social media standpoint, everything I've seen so far has been really negative.
That's what stocks do. People trade them based on what they think is going to happen, and optimism's still in there. All right, great stuff. Thanks to Jenny Horne, markets correspondent here, joining us, breaking down the Tesla and Apple downgrades.